In our very first video of auditing, we have seen our syllabus. Now, we are starting with our first unit, that is introduction. Now, firstly, we'll see the meaning of audit. So, before 18th century, goods were produced by individuals on very small scale. The individual who invested the capital usually himself maintained the accounts, and therefore there was no necessity of checking them. But after industrial revolution during 18th century, large scale production started. Along with that, stabilized government, expansion of banking facilities, and new means of communication widened the scope of investment and business. Especially in case of joint stock companies where shareholders are from far off places and have no involvement in actual business. Therefore, it becomes essential to get the accounts audited to assure shareholders that their investments are safe and the persons running business are utilizing capital in proper manner and showing the true and correct accounts. Previously, they have practiced to choose one of the shareholders for checking accounts and procedures of firm. But such a shareholder may not have technical knowledge of accounts. So, to have an effective check, they started appointing professional accountants for the purpose. Now, the word audit is derived from the Latin word audire, which means to examine for the purpose of verification or to hear authenticity of accounts. Now we will go through the definitions of audit. Here we are going to see few definitions of few authors. So you have to by heart the definitions as it is. So among these four definitions, you have to by heart any two definitions for the purpose of your preparation. So this is the first definition of audit, that is given by Spicer and Pegler. The definition is such as examination of the books, accounts and vouchers of business as will enable the auditor to satisfy himself that the balance sheet is properly drawn up so as to give a true and fair view of the state of affairs. So, the first definition of audit is given by Spicer and Pegler, which is such as examination of the books of accounts and vouchers of a business as will enable the auditor to satisfy himself that the balance sheet is properly drawn up so as to give a true and fair view of the state of the affairs of the business and whether the profit and loss account gives a true and fair view of profit and loss for the financial period according to the best of his information and the explanation given to him and as shown by the books, and if not, it was in what respect he is not satisfied. So this is the first definition. Now the next definition was given by J.R. Bartley Boy, a renowned authority on accounting and auditing, defines this auditing as an intelligent and a critical scrutiny of the books of accounts of a business with the documents and vouchers from which they are written up for the purpose of ascertaining whether the working results for particular period as shown by the profit and loss account as also the exact financial condition of that business as reflected in the balance sheet are truly determined and presented by those responsible for their compilation. So, what the author is saying about audit is an intelligent and a critical scrutiny of the books of accounts. Scrutiny means examination. Intelligent and critical. Critical scrutiny means from the point of view of criticizing something, means finding out mistakes in the books of accounts of the business, which are documents and vouchers from which they are written up. So, first of all, auditor has to examine vouchers and documents because on the basis of these documents and vouchers only the entries are made in the main books of accounts. So, for which purpose? For the purpose of ascertaining whether the working results for particular period as shown by the profit and loss account as also the exact financial condition of that business, means whatever the profit or loss whatever is reflected by the profit and loss account is exactly same as the condition of business or not, as reflected in the balance sheet are truly determined and presented by those responsible for their compilation. So this picture of profit or loss is perfectly reflected through the books of accounts, means profit and loss account and balance sheet or not. This has to be checked out by the auditor, and from whom? By those who are responsible for their compilation, means the persons who are recording these entries in main books of accounts or making the documentation is proper in all the respect. This will be checked by the auditor. Now the next definition is, this definition is by the Institute of Chartered Accountants of India. The Chartered Accountants of India, the Institute of Chartered Accountants of India, in its publication of the statement on standard auditing practices, basic principles governing an audit, describes this definition of audit, that is the independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, when such examination is conducted with a view to expressing an opinion thereon. Means what is said in this definition is the audit is an independent examination of financial information. Means it is basically we can say that it is audit is the similar word for inspection. Means it is a sort of inspection, means to go through the procedures and documents to check their validity or check their correctness. So the independent examination of financial information of any entity means uh, auditing or audit can be made of any kind of business firm, whether it is profit oriented or not. Means whether the firm is intended for making profit or not, or uh, and irrespective of its size or legal form. The firm may be small scale industry, large scale industry, cottage industry, or maybe public beneficiary. In any means the business form, for any business form audit can be made. When such examination is conducted with a view to expressing an opinion thereon. Means audit uh, is to examine in examination in the point of view to express an opinion thereon. Means to examine means to check the accounts from the point of view to give opinion on those books of accounts of the firm. Means whether they are correct or not, correctly maintained or not, and the documentation is proper or not. Such like opinion must be given by the auditor. So in this definition the conclusion is the audit can be made of any kind of business, whether it is small or large, whether it is profit oriented or not. So we can conduct audit of any kind of business in the point of view to examine it and to check our books of accounts. Now the next or the last definition of audit is given by Montgomery. He is a leading American accountant. He defines auditing is a systematic examination of books and records of a business or other organization in order to ascertain or verify and to report upon the facts regarding its financial operations and the results thereon. So, what Montgomery is pointing out is auditing is a systematic examination. Systematic examination means uh, it has some certain kind of procedure to be followed while auditing any firm. So it is very systematic examination of what examination of the books and records of a business or any other organization. So it is a systematic examination of any kind of business or any kind of other organizations. Means that may be bank, that may be credit societies, or that may be any educational institute. So any kind of business or any kind of organization uh, can be get audited. So uh, systematic examination of books and records of a business or other organization. For what purpose? In order to ascertain or verify. In order to verify what? To report upon the facts regarding its financial operations. So, auditor has to verify the financial operations of the firm or of any business, and he has to give the results thereon also. So the auditor has to check out for the financial condition of any business firm or business organization, and he has to give opinion about the true picture of or true financial picture of the organization or business, from the point of view that the all the procedures of recording accounts are followed, all the kind of documentation is made properly, and there is no at all fraud regarding any cash matters or documentation. So this is the concept of audit and definitions. We have gone through this, and in next video we will start with the next point of our first unit. So till then, thank you.